What I think has really happened since the price bubble and the mortgage doubling is, we one of two things could happen. We could either have a price crash, and if you're on YouTube, you still see people that are promoting the notion of a house price crash. Please don't pay any attention to them. Or what you have is a period of time where the market goes through kind of a reset period.
Okay.
And when this first happened, my thought was it was going to take the market about 3 to 5 years to adjust and reset.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everyone, welcome to the Real Estate Pros Podcast. I'm your host, Micah Johnson, and today I am joined by Rick Sharga, who has been making serious moves in the market with a market intelligence firm for people in the real estate and mortgage industry. And I know that was a bit of a mouthful, but this is one of the most fascinating topics. I'm really excited for it. Rick, welcome in, man. Glad to have you.
Nice to be here, Micah. Thanks for having me.
Absolutely, man. I think our listeners are really going to take some value away of, one, just the breadth of your experience in the industry, as much as you've been able to see now for so long, and particularly where that places us today in the current market cycle. So let's dive in on that. For people who may not know you yet, what is your main focus right now, and what markets do you operate in?
Yeah, I really do deliver market intelligence kind of on a national basis for companies that are in real estate and mortgage. And so that requires me to kind of keep my finger on the pulse of everything related to the housing market, the broader housing economy, what's going on in the mortgage industry, foreclosure activity. And I do an awful lot of research around the whole notion of real estate investing, who's buying, where they're buying, what they're paying, how they're doing. So it's just it's a kind of a sweet spot in my overall focus.
Awesome. It's fascinating to me. I'm excited for what we're digging in on, because let's dive into what are you seeing? Like, let's take just take us through your experience first, and then what you're starting to notice based on what's been happening here for the past few years.
Yeah, let's just focus on that, Micah. We're coming out of a very, very unique cycle that we've never experienced before in the housing market in the United States. And we can go back to COVID and thank the pandemic for kind of throwing us out of whack. But we came out of the pandemic, and in about a 2.5 year period, home prices across the country went up by about 50%, which is just a crazy price increase in a very short period of time. We had real anomalies like Boise, Idaho, seeing prices go up 47% in 1 year, which has never happened. And on the heels of that, we had an inflationary problem that the Federal Reserve decided to try and address by raising the Fed funds rate, and we saw mortgage rates double. We'd never seen mortgage rates double in the history of the United States in a calendar year. And in 2022, they doubled in the matter of a few weeks. So that just crushed affordability. That 1-2 punch of home prices going up by almost 50% and then mortgage rates doubling overnight. And we went from a market where we were selling 6 million existing homes a year in 2021 down to 5 million in 2022. And now for the last 3 years, we've kind of flattened out at about 4 million existing home sales a year.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And you and I were talking about this a little bit before we went on the air. And from my perspective, given the size of our population and the size of our economy, we really should be selling closer to 5 million properties a year, but affordability has just kept those numbers down. It's been a huge, huge headwind in the home sales market. And from my perspective, I think 4 million becomes the baseline. That looks like probably the lowest number of homes we should expect to sell in the United States in the course of a calendar year. And that's people that feel like they need to sell. There's a catalytic event in their lives. They get a new job, they lose a job, there's a birth in the family, there's a death in the family. Something happens, it's a catalytic event that causes them to want to or need to move. And that number is about 4 million. And what I think has really happened since the price bubble and the mortgage doubling is, one of two things could happen. We could either have a price crash, and if you're on YouTube, you still see people that are promoting the notion of a house price crash. Please don't pay any attention to them. Or what you have is a period of time where the market goes through kind of a reset period. And when this first happened, my thought was it was going to take the market about 3 to 5 years to adjust and reset. And so from my perspective, 2025 was probably year 3 of that reset period. And as we got to the end of the year, I was starting to see signs of a market recovery. And I believe that in 2026, we're going to start feeling like the housing market is in the early stages of recovery. As we go from the beginning of the year to the end of the year, I think we'll start to see the housing market really feel better and feel like we're on the road to moving back to what are more normal times in housing.
And I'm sure there are a lot of folks that are happy to hear that right there because it's been an interesting time. And we talk about market cycles all the time in real estate and how they repeat, but it's fascinating that we finally hit one where, yeah, it was a cycle, but it was nothing like we've ever seen. And
No.
now we're truly watching almost in real time every day. Okay, what's it look like to recover from that? What we haven't seen it before. We can't say what it's going to look like, speculate all we want, but we're literally living it out on a day-to-day basis of, okay, here's how you recover from a market that did this.
Yeah, and the reality is when you have a shock to the system like we did, and really the shock was felt mostly when the mortgage rates went up overnight. It does take a while to reset, and the solution to the problem, which nobody wants to hear, is time. It just takes time for things to normalize. And the reason I said that the end of 2025 started to feel like the very early stages of a recovery is because we have 3 market conditions that started to shift. And these are important conditions for investors to be paying attention to.
Okay.
One is that home prices across the country started to settle down. We went from a year ago, home prices going up 5-6% year over year nationally, to home prices going up a little over 1% in the latter part of the year on a year over year basis. And in some markets, actually going into correction mode, actually declining a little bit year over year. So that was one thing that we needed to see from an affordability perspective. A second is that we continue to see wage growth improve. And so wages are going up about 5% year over year. That's almost twice the rate of inflation right now. certainly much higher than the rate of home price appreciation. So that'll help from an
Mm.
affordability perspective.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And then the third thing is we finally started to see mortgage rates come down a little bit. I don't expect we'll ever see 2 and 3% mortgage rates again, but we're now close to getting below the 6% mortgage threshold, and that's bringing more buyers to the market. So those three levers, if you will, of affordability are all moving in the right direction right now, and I think we'll continue to see slow improvements as we go through 2026. But even those incremental improvements bring more buyers to the market. And as that happens, I think it starts to fuel that recovery. Over time, fewer and fewer of those homeowners are going to be sitting on 2 and 3% mortgages. More and more will be at current mortgage market rates.
Right.
And that opens up more inventory to come to market and makes it easier, for example, for a fix and flip investor to find a buyer who's able to afford that property that they're looking to resell. So those market conditions have been improving slowly over the course of 2025, and I think will continue to improve in 2026.
I agree. And if any other statistics, one I remember in the realtor days, it's about on average people move every 4 to 5 years anyway.
Yeah.
And you're getting to the point where we're hitting the time, and again, like normalization of just hearing those higher numbers. I was talking with an investor the other day. He started in the 70s, and he thinks it's funny what the numbers are now. It's like, to me, man, we had 11, 15%, like 6% is cheap. So it's like getting this perspective on what it is that you're looking at, because we have to stare at the same number all day, right? Like,
Yeah.
we only see it a day at a time, and then over time we can zoom out and see what's going on. So the reality is, based on what you're saying too, more and more people are going to be coming to market for a lot of good reasons. Natural things are starting to take place. We got three levers: prices calming, wage growth, mortgage rate drop. Like, all the ingredients are there. Like, the recipe's making itself, and it's just
Yeah,
baking.
the last few years have been really tough for fix and flip investors, and because of that, we've seen the number of flips go down. I think for 4 consecutive quarters now, according to
Mm.
some reports from Adam Data. We've seen margins compress. We see other issues that we haven't even talked about, like homeowners insurance rates going through the roof, or homeowners insurance being unavailable in certain markets
Mm.
because of extreme weather events and the losses the insurance companies have been taking. And I know a lot of flippers, experienced flippers who really knew what they were doing, wound up losing money on deals they were doing in 2023 because they bought
Mhm.
properties in 2022 before the rates doubled, and suddenly the buyers they had expected to come to market couldn't afford the
Yeah.
list price because their financing costs had doubled. So the fact that things are settling down a little bit, I think bodes well for flippers. Demographics certainly play in their favor. We had about 5 million people turn 35 in the country in 2024. We had a similar number turn 35 in 2025. We'll have another similar number in 26. Those are all people typically who are coming of age from a home buying perspective,
Okay.
and are going to be looking for a place to live. The last few years have been really much better opportunities for investors who are buying properties and renting them, because these young adults simply haven't been able to afford to buy a property in today's market. Again, I think those conditions are starting to shift a little bit, and I really do believe that 26 will be a better year for flippers. But you're also going to have to be careful about what kind of properties you're buying, how you're pricing them, and be really, really aware of local market trends. I always tell
Mm.
investors, you want to look for markets where population is growing, where jobs are growing and where wages are growing. And if you have those three things happening in a market, it's going to be a good real estate market, whether you're looking to sell a property to an owner occupant or whether you're looking to buy a property and rent it out to a family. Those are the kind of markets you want to be looking at. And you also want to be looking at markets if you're looking to rent a property, that you can buy a property at a low enough price that you can immediately get positive cash flow on a rental. So just so many market conditions you have to be aware of, so many details you have to look at, depending on where it is you're looking to invest in properties and what your end goal is, whether it's to hold properties long term or sell them at a profit.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
It has definitely required a savvy investor to stay, right? No I've seen other market cycles where they all do the same thing. They get the riffraff out. Like, if you're not good at it, you ain't going to survive one.
Yep.
But when there's ones like this unique one that made the pros start to struggle, because you're right, those are the guys that rise right to the top whenever the market gets hard. Like, they don't mind it. That's the blood in the streets mentality. That's when they can capitalize most. But this one didn't do that. And
No.
like you're saying, unless you were lucky, you had to leave your backyard. You had to start studying markets and understand, what can I do? Where can I do it? Where can I still do that thing? And now I hear way more people in multiple markets than I heard before.
Yeah.
Most used to just stay right in their backyard. And now I was on a long-term hold call the other day. He's in 4 states now. I mean, he was only in 1 for the longest time, then boom, right into 4. And it's like, okay, that makes sense. And it lines up with the data you're talking about. These things you have to find that will be available. Now, what are you seeing as opportunities? How can people capitalize on 2026? What can they pay attention to?
Look again for migration demographic trends. We do still have people moving out of the more expensive markets into less expensive markets, whether that's moving to something that's adjacent to a major metropolitan area, but less expensive pricing, or whether it's a less expensive state. Anecdotally, I have 2 adult kids. One lives at home. One recently got married. The married one is a teacher. His wife is a lawyer. We live in California. They came to me to ask what states they should be looking at to move to so they can someday afford to buy a house. And I suspect we're not the only family having that conversation in an expensive state like California, where the median price of a home is $850,000.
Wow.
So I do think it makes sense to be looking at markets that are less expensive, but population is growing, because that's where you're going to have both your rental and your fix and flip opportunities. So what does that mean? That means you're probably looking at states like South Carolina, like North Carolina, like Tennessee. You might be looking at parts of Florida. You have to be a little careful in Florida because there are parts of the state where property values are continuing to decline. So if you know the market and you're smart enough to buy on the dip, you might be able to actually make that work to your favor, but you also don't want to be the one catching a falling knife. So I do think 2026 will probably still have more opportunities to buy and rent than we will to fix and flip. I think that will gradually level out as we get through the end of the year and move into 2027. But again, it's a look at where people are moving, and a lot of that movement is to the south, southeast, and Midwest, where property values are less expensive.
Mississippi is another one I've been hearing more and more people investing in, finding that cash flow. The kind of properties where you can go find cash flow now, like that's
Mhm.
what they're looking for. And those ones are true. I'm born and raised in Florida, in the northern part of it, and I'm just
Yeah.
thinking around. I'm using what you're talking about, where prices calming wage growth, those things, job, population, wage. And I'm thinking through these little towns that are not many people would know about, but are exploding right now. They're actually There's one I grew up near called Lake City, which it has I-75 and I-10 running through it, which are big interstates on the East Coast. And just, I'm like seeing all the data you're talking about and then looking at these places. It's like, oh, wow. Okay. I don't know. I geek off on that stuff. That's so fun.
Well, data can be fun, even though people think it's not fun and it's all math. Um, yeah, there are parts of the country. I mean, Ohio is probably one of the least talked about states in the country in terms of real estate investing, but Columbus has been this hidden gem of a market for years, and continues to be a good investment market because of the job growth there, because it's tethered to the university, the Ohio State University. There's technology investment going on in terms of a fabrication plant for Intel. So, when you see a market like that and where property values are still reasonable, that Midwest corridor, whether you're looking at Western Pennsylvania or Ohio or Indiana, a lot of gems in those markets, where you wouldn't normally think to look because they're not places that typically get all the headlines.
Yeah. Yeah. And that's another thing I think is interesting about real estate is if you can read the terrain, if you can look at what's going on, there's somewhere to capitalize all the time. Now, you
Yeah.
can buy into whatever doomsday you want to, but no matter what, you're either going to solve the problem or you're not. And there's some lever you can pull that's going to find that deal, create whatever it is you're looking for, as long as you're willing to adjust, as long as you're willing to pivot. You just got to be open to that part.
But a couple caveats for investors for next year. You were talking about Florida. There are parts of the Gulf Coast in Florida where homeowners are now paying more for their insurance on a monthly basis than they're paying for their mortgage. So it typically hadn't been something investors had to factor into their acquisition price or their holding costs. Insurance was kind of de minimis, and you just kind of deal with it when it came. But when you're seeing insurance rates double and triple in a year, suddenly that becomes a big affordability issue. And if you're going to be flipping a property, you might not think it's that big a deal because you're only going to be holding the property for a few months. But your buyer now has to factor in those insurance costs and may not be able to afford what the property used to be valued at, because now they have to factor in that mortgage, and the insurance as part of that mortgage. And they may not be able to afford what you think you're going to be able to sell the house for. So there's things like that. There's markets where I wouldn't touch a condo if you paid me. And condo markets are always much more volatile than your typical single family units. So I do think there's some cautionary notes as you go into next year. And keep an eye on the economy. It looks like it's going pretty well right now, but jobs numbers are weak, so that could be another red flag. And you want to keep an eye on what's going on in terms of unemployment rates in any market you might be looking at as well.
So before we wrap up here, what's that final word you want to give to the listeners, that closing point on just how to make sure they're doing well? Because I really hear you hammering on is do your homework on your deals, do your homework on your market. This is not the time to not pay attention to the details. Like, the devil's in the details right now. So you got to be very intentional. To close that off, what would you say?
I'd say know your local market, and by local I mean wherever you happen to be investing. This is a good time to broaden your network of local market experts, and that's particularly true if you're planning to invest beyond your usual geography. They're going to be the ones who help you find the best deals, who can advise you whether a property's in a desirable location or an undesirable location. So doing your homework, doing your due diligence is probably more important now than it's been in quite some time. But the light at the end of the tunnel finally looks like it's probably not an oncoming train. It really does look like the housing market is getting ready to recover. And I suspect that 26 will be a little better than 25 was. And I think by the time we get to 27, it's going to feel like the housing market's in much better health than it's been for the last few years.
Man, that's great. Thank you so much. I appreciate it. I appreciate your story, your time. I love getting to talk to folks about these kind of subjects where it's real stuff that you can take out there and apply right away. So for those of you tuning in, thanks for joining us. Rick, if someone wanted to learn more about you, learn more about the company, what's the best way for them to find you?
We do have a website, but honestly, I post very regularly on social media, so I'm very happy to connect with folks on either X or on LinkedIn, and not very hard to find. Just look for my name, and you'll find me there.
Excellent. We'll make sure your links are in the show notes below. Again, everybody, thanks for joining us today. Thank you so much, Rick. We've got more conversations coming up with operators just like Rick are out there learning, digging in, understanding what it takes to be successful right now in the industry. Thanks again, everybody. We'll see you in the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.